Hey guys, welcome back on the channel. So let's talk about banking on Bitcoin. I did a video about this last week. I'm going to expand over that on this video and I'm going to show you how to open a position using PancakeSwap. PancakeSwap is a reputable exchange. If you are new to this, PancakeSwap or Uniswap are the best, okay? Do not take my word for it. Go check it out yourself. Do your own research. But they are among the most secure exchanges in DeFi, in decentralized finance. Actually, PancakeSwap is a fork of Uniswap. They have been operating for years, zero hacks, okay? Hopefully it will stay like that in the future, but it's not because there's lack of trying. Let me go back here on PancakeSwap to show you total value locked 3.6 billion plus total trades in the last month 99.5 million. When there's this amount of money flowing in, definitely there's some people trying to crack it and get a slice of this. So far, nothing has happened. Knock on wood. I hope it does stay like that in the future though. And that's why I'm showing you this with reputable exchanges. If you are used to centralized exchanges, DeFi is completely different, guys. You gotta know what you're using. Where are you deploying your liquidity? Of course, you want to go with secure protocols. PancakeSwap is, Uniswap is also. So pick one of those and there's multiple blockchains you can use. Later on, I'll show you how to deposit with PancakeSwap as an example, but you can go on and use also Uniswap. In further videos, I can show you how to do that, okay? There's a ton of things to cover. So if I do not go over something that you might have a question, or if I'm talking too fast or just going over some topics too fast and not explaining in as much detail as you would like, let me know in the comments, guys. I'll get back to you. Potentially I can do a video about it even, all right? So what you're looking at is what could potentially be a scenario. I set up this with 3 different ranges. So from the first blue line to this first orange one, this could be one range. In between these 2 orange lines, another range. And then in between this orange and this last blue line, another range. This is because I think most of the people going into yield farming, liquidity pools, they make a big mistake, which is deploying their whole liquidity in just one chunk, into one pool. But you can have multiple ranges. It's virtually unlimited ranges you can deploy into a pool. So you could go, for example, and deposit 1K into your main liquidity range, which would be something that you look at the chart and say, okay, I think this range is good. I want to deploy liquidity there to generate me some passive income. But do not deploy your whole liquidity. Why that is? Because you see, this one seemed to be a very reasonable range to be farming for 115 days. That's almost 4 months, right? And overall 20% range. But it's not really all that wide if you are used to volatility in crypto. 20% range is a very good range for you to start to get a feeling, I would say. But then look at what happened here. The price actually went down from 98k to at around 80k, and that's 20% on the downside in just 1 week, right? If you had deployed $3,000 as an example in this range, now you lock in, well, you don't lock in permanent loss until you withdraw, but now you're not generating fees, you're holding 100% Bitcoin, and that Bitcoin just went down 15%, and you're probably thinking, okay, I'm going to sell this. I don't want to lose money, because whatever you generated in fees before, it's allowing you to break even, or you are at a small loss. Although potentially you would still be up. Looking at this volume here, potentially you would still be up, granted that you entered in the beginning of November and you got all of this volume. But instead of doing that, you can deposit 1K here. If the price goes down, you deposit 1K more. And now this liquidity here, it's not generating fees, but it's still there waiting for the price to bounce back up. And now you have this whole $1,000 down here, which you could have already yourself deployed initially. So instead of deploying the liquidity in just one chunk, you could have all of these 3 ranges operating at the same time. Well, I'm saying operating, but of course the upside range and the one on the downside, these would have not been generating fees while the price was charting in between 107k and 88k. So they would have been idle. But then when the price goes down, this one starts to go to work and it generates you fees for 3 months, almost 2 months, 56 days. That's how long that 1K's worth of liquidity generated fees. Then the price moves back to your initial range, to the range that was initially generating fees, right? And it stays there for the most part of the next 81 days. So now this is working, this is idle, and on the upper side range, it's also here and there generating some yield. And as we see later on in the future, of course we don't have a crystal ball, but later on in the future, this 1K upper side deposit, this is actually the one that would have performed the best, because for the next 154 days, now this one is working for the most amount of time. And remember, these lower ranges, these lower LP positions, they are still there. They are worth 100% USDC because the price is trading above this price range. So now you're holding 100% USDC. Your Bitcoin was sold for USDC, or in this case USDT, because that's the liquidity pair we're talking about. But it goes the same way. It's still a stablecoin Bitcoin pair. Now, this is also not native Bitcoin. Have that in mind. This is backed by Binance. BTCB, it's backed by Binance. But you can apply all of this to other liquidity pools, like using other tokenized versions of Bitcoin, like CBBTC, WBTC. Stick with those. They are backed by serious entities. It doesn't mean they're risk-free. I'm not saying that. But they are assets that give us exposure to Bitcoin, right? So that's the whole point of banking on Bitcoin, since Bitcoin itself, the blockchain, does not have DeFi. So I'm telling you all of this because I think one of the biggest mistakes that people do is go all in, deploy their whole liquidity in one chunk, and also they do the mistake of having a very narrow range because they are hunting for yields, and that's something you can definitely do. The thing is that if you're looking to provide liquidity in the long run, probably that's not going to be the best option, especially if you are a beginner, okay? So try this out, have multiple different ranges, split your liquidity evenly according to that. Or you can do, as I will show you later on in this video, is have an even wider range, and you can DCA in. What that means is that instead of buying Bitcoin every single day or every other week, whatever your strategy is, you could as well deposit into your liquidity pool with a wide enough range, grow your bag, your liquidity pool position over time by doing those deposits, and it will generate you yield over time instead of having your Bitcoin sitting idle. So let me show you how that works with PancakeSwap, how you can open a liquidity pool there, set your ranges, and start generating some yield. It will start small if you start with a small deposit, as I will show you, but it will consistently grow over time as long as you keep depositing there. Alright, so we're on PancakeSwap. I'm gonna go on Earn, All Pools. If you never used PancakeSwap, I recently did a video about it, explaining you all about the liquidity pools, how to read everything on screen. I will link that below. Go check it out if you haven't, and if you wanna know more and learn more about how to use liquidity pools on PancakeSwap, okay? Now there's a number of pools that we can find here on PancakeSwap, huge amount, so you gotta know what you're looking for. BTCB, it's the token we were looking at in the previous chart. This is the Binance-backed tokenized version of Bitcoin, right? You can have multiple liquidity pools with this token. You can have it paired with BNB, different stablecoins, USD1, in this case USDT. This is probably the pool we were looking at on the screener. Also wrapped stake ETH, XRP, ADA Cardano. So if you're looking to pair up BTCB with other blue chip assets, PancakeSwap is definitely the best option out there. But as a complete beginner, go with the stable one for a couple of reasons. Because a stablecoin Bitcoin pair, it's going to be widely used, not only when markets are hot, but also in bear markets. This is a constantly used liquidity pool. You can expect it to operate over the period of years. So if you are in range, this will generate you fees. Just think about it. People take profits from Bitcoin to stablecoins, and also likely people buy Bitcoin using stablecoins. So if someone is on the Binance Smart Chain ecosystem, likely they are using this pair at some point in time, and it is a consistently used pool, and that's what you want. You want your pool to be used not only on bull markets but also during bear markets. So we could go, let's go back here on the screener. We could go with any of these given ranges here, but because I was just showing you how that operates, let me delete all of this. All right, so now it's much tidier. The range that you use, it has to be up to you. So for example, you can set an upside on the current all-time high. So this would be something that would work best for the short term. We set up our upside according to all-time high at around 125. And the downside, we can see this is the first support level. Like when it dropped back in October 10th, the flash liquidation event that the market faced, manipulated for sure, but it still did impact Bitcoin, right? So we can see here that this point in time where it was chopping sideways actually turned out to show up the first support level for Bitcoin. So if you want something for the short term, this support level is probably going to be a good bet for you to deposit and set up a range on the downside, right? So this could potentially be it. Let's look at overall how much percentage this is. So we're looking at a 16-17% range. Like I said, short term, anything that is up to 20% will work very well. If you want something also that it will allow you to bank on Bitcoin and generate fees, even if the Bitcoin price falls lower, you can look up to the next support level, which I would say it's something at around this 95k, something like this would be also the next support level. If this one breaks, this is likely the next level where Bitcoin price will find support. Below that, we can see this one where it was chopping sideways at around 80k would be the third next support level. So remember, the wider you go, the lower your APR will be, but it will grant you that you will generate fees. And I would say it's best for the long term, for sure, to go wider than narrow. You can even use that strategy that I told you earlier and have a bigger bag deployed on this wider range, and you can necessarily even expand this to 130, 40, or 50 or above, have a bigger bag there, and then have a smaller bag, like for example 5 or 10% of your yield farming portfolio in this pool, allocated at around the current price of 108k. So something like at 115 on the upside and on the downside 100k. So that's definitely also something that you could set up to be your current ranges, and you would have two different bags. As of now, they would both generate you yield, although this narrower one would generate with a much higher APR. So this would be a good one for the short term. So let's even go a bit higher here on the upside, 120 and 100k on the downside. And let me open up a liquidity pool position like so, just to show you. And remember, this is just an example. We are going to use this pool, but likely we can find others, for example, on base with higher APRs. I know for a fact those do exist, but it doesn't necessarily mean you have to go with those. It's up to you. At the end of the day, it's your money, right? I'm just showing you how to bank on Bitcoin with liquidity pools. And I know that on base, there's going to be some good CBBTC pools, because after all, Base Chain is the blockchain of Coinbase, and CBBTC, it's Coinbase's Bitcoin tokenized version. So look at this one, actually, Bitcoin paired with Litecoin, both backed by Coinbase, right? So these are not native tokens. APR 379%. Most of this is coming from cake farms. And I think this is actually a good one if you're looking to yield farm, not necessarily to bank on Bitcoin, right? But if you're looking to yield farm with exposure to Bitcoin or blue chips, look at this pool. Really, really good. I did a video a while ago about reasons to yield farm on PancakeSwap. This was actually one of the reasons. They have really good farms with blue chip assets. But also look at this one, USDC CBBTC, triple digits APR. There's a big chunk also coming from farm APR. This will be paid in cake, but still, it's a good option. But let me go back to BNB chain. I have some funds there, some stable coins. I'm gonna use those to yield farm on BTCB paired with USDT. So let me find that pool here. So here it is. It has some farm APR as well, 4% APR on the farm. So let's go on, add liquidity here. This would work the same way regardless of the blockchain, okay? So have that in mind if you are completely new to this. Let me just swap here the current price to show the price in dollars for one Bitcoin. So let's say in the downside, we are going to go with 100,000, and on the upside 125, which would be roughly all-time high, 43% APR. Don't get too caught up with this because APRs will fluctuate. This is based on past performance. But we're looking at around 43% APR. For the short term, I think this would work. So let me go ahead and deposit some USDT. What I'm about to show you is I'm going to try Zap. This is very handy. If you have only one of the tokens in the pair, or if you have other tokens in your wallet, not necessarily the ones in the pair, Zap is going to be a good option for you to have your liquidity deployed without having to swap tokens or anything. You see add or remove token. I just removed Bitcoin. I could add some other things that I would have in my wallet. So it's just a matter of you to selecting from that, but I'm gonna go with BTCB because I also already have that, and I'm gonna click max for both, and I'm going to wait for the loading to switch to preview. Click that. It gives you all the necessary information about the deposit. It will swap everything on the back end. Okay, so even if I would have only BTCB or only USDT in my wallet, I could deploy that with the Zap feature and they would do all the necessary trades on the back end. Okay, so I'm going to click preview. It shows us, according to my range, how much USDT my LP position will have. They will do all the necessary trades. Okay, you just need to worry about adding liquidity, sign in and confirm in your wallet. So I'm going to click confirm. Everything is good. And now boom, my liquidity is already operating. Under my positions, I will find it. I click it and now I can see it is already generating yield, although I only deployed it right now, but you see it already is showing up some BTCB accumulating here, as well as some USDT, although very, very little still. So as time goes by, these will keep on growing. But it goes to show, guys, even a small deposit works. And the whole point of this is that instead of DCAing, I can come here every day, every week, every month, and deposit some more in the shape of USDT in the pool. As long as I am in range, it will keep on generating fees. Like I said, this range is a bit on the narrow side, so I don't expect it to keep operating for a long period of time. Let's see. If I would go to 140 on the upside and 80 or 90 on the downside, my APR would probably be at around 20%. But like I said, it doesn't really matter. This is something for us. It's like a piggy bank that earn us yield back as long as people use this token pair to trade. They buy BTCB or they sell BTCB using this pool. We will generate fees, and this is one of the most used pools. It works on the bear market, it works on the bull market. The only thing you need to worry about is to be in range, all right? In other videos, I'll show you how to do just the same thing with Uniswap, and also in other videos, I will show you a way for you to manage this with Crystal, which can be a bit easier to manage your LPs from there instead of using PancakeSwap. But I'll show you that in another time, guys. Go test it out for yourself. This is a way for you to yield farm. Remember, you can always use whatever range you want to set, right? So look at the chart, play with ranges, see what are you looking for, how much you want to yield, but also do not get too greedy. Do not get too caught up in the high yields, because in the long run, that's where you will see the biggest difference with this. For example, you see here when it dipped down to, well, it dipped from 105K down to at around 80K. This was 20%, 23% decrease in a matter of 82 days. And most people or many people would say, okay, the bull market is done, blah, blah, blah. That is just noise. Look at how it did in the following 45 days. It went up, it bounced back 36%. You want to have a range that catches all of these rallies because there's an insane amount of volume being generated. This is where you'll see the most profits, and it will allow you to then take profits once the price reaches these. Back then this would have been all-time high, right? So the current range that I have, if price goes back up and touches once again all-time high, take profits. The pool itself, it will be 100% worth USDT, but your fees, the fees that the pool generated, will also be substantially higher. Volatility is your friend if you have a wide enough range. Those are the moments when the market is hot, everything is printing, it will generate a ton of fees. People are FOMOing in, there's a lot of trading happening. You are banking for sure, literally. you will earn a lot in fees in those market times. When the price goes down, it's time for compounding, not panicking. That's why I'm making this video, this series, banking on Bitcoin, because after all, it's the strongest crypto asset. If you are not bullish about holding Bitcoin and buying in the dip and compounding when the prices are going down, probably crypto isn't a space for you. All right, guys, if you have any questions, let me know in the comments. Next one, I'll show you how to do just the same thing on Uniswap. Check out below in the links my how to use liquidity pools on PancakeSwap video. Even if you're completely new to this, it will get you right on track with how to work with PancakeSwap, okay? On the upcoming days, I'll show you different exchanges, different tools that you can use to just manage your liquidity pools, your positions there. But if you have any questions, let me know in the comments. Potentially, I can even do a video to reply to that, because likely it will help a lot of people, not just you. So guys, that being said, I'm going to wrap this one up. Thank you for watching. Take care, keep exploring crypto, and I'll see you on the next one.